We're talking about blanket cuts of pay of workers at Volkswagen by 10% across the board.
How much can you lean into what seems to be an outsized area of success for Ford there in hybrids?
At the end of the day, we look at least half, if not more, of the value being ascribed to their AI opportunity, and particularly autonomy as the first application within that AI bucket.
All that and more. So let's get to it. Tesla stock has turned positive in the pre-market, brushing up against that resistance in that 260, 270 area. The 52-week high appears to be where that resistance line is. Should Tesla break through it? Well, your guess is as good as mine where it'll finish for the week, month, or rest of the year.
We've been talking about the woes of the manufacturing and the German sort of auto industry for a long period of time. What we got today is the proposal for Volkswagen, the brand Volkswagen. These are the cars with the actual VW print on the front, not the whole group. What they're actually intending to do about it, what sort of cost-cutting measures they are going to roll out. And John, they are absolutely huge. We're talking about cost savings of about 4 billion euros. We're talking about blanket cuts of pay of workers at Volkswagen by 10% across the board. We're also talking about the closing of 3 factories. That is what they plan to do at the management level. This is a company that has never in its history once closed a factory in Europe. We're talking about closing 3 in its home country right now of Germany, potentially 1 in Belgium as well. And of course, this will mean potentially tens of thousands of job cuts. So again, just to reiterate, Volkswagen talking about closing 3 German factories for the very first time in its 90-year history in Germany.
That's not good. Hopefully that's not foreshadowing for the legacy auto manufacturers here in the United States.
I do want to start looking a little bit forward, David, rather than looking backward at the most recent quarter and some of the costs and, more importantly, the losses that we're still continuing to see in some of their businesses, including that EV-related business.
Yeah, look, they said they were going to lose $5 billion on the EV business this year. I think it lost $1.2 billion in the quarter. And I think the problem here is there's nothing really in this report that says they're getting that under control. The earnings they're talking about for the year looks like within range, but at the bottom end of the range, they were talking about earnings before interest and taxes being as high as $12 billion. Now it's coming in maybe closer to $10 billion. That tells you that these things like warranty costs, losses on electric vehicles, they just don't quite have a handle on that yet to the point where they can give stronger guidance going forward. So, and I think that's what investors were really looking for. Whereas, with General Motors, you had a quarter where they were at the higher end of the range, and they also had cash flow forecast that was above the previous forecast. All of that says that they're going to keep buying shares back and that they're operating the business well. And Ford's still trying to get a handle on some of these issues that investors were really keying in on for this report.
Getting a handle on your EV business, trying to reduce some of those losses, it's imperative. We're not over there in Europe. Europe's got like a 25 plus EV adoption rate over internal combustion engines. Here in the United States, we're not there yet, but trust me, we will be. And for those companies that can figure out producing battery electric vehicles for money, it will be those companies that succeed. Everyone else, yeah, they're going to be taking a page from VW's book. Once the United States starts seeing numbers in that 20% realm, there will be a reckoning. Hopefully, our legacy auto manufacturers will have turned the page.
John Lawler, thank you for joining us. And I think the question that a lot of investors have looking at the reaction after the earnings came out is, let's talk about your guidance. You beat the street on the top and the bottom line in the third quarter, but you're guiding towards the low end of your full 24 earnings, what you're expecting for the year. What's driving that caution?
Well, when you look at the year in total, Phil, our top line's doing better than we had expected. On strong volume and mix, especially in Ford Pro, pricing's doing better than the industry overall.
Blah, 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 blah.
You mentioned warranties just now, but it's not in your earnings release in terms of how much you lost in the third quarter, or I shouldn't say lost, but what the impact was. Can you tell us if you made progress there? Because you've struggled in previous quarters there.
Blah 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 blah.
Hi, John. It's John Fort. I've got some questions for you about hybrids. That business was up 30% for you. You've got 77% of the hybrid truck market in the quarter. Sales up 42% there of hybrid trucks. How much can you lean into what seems to be an outsized area of success for Ford there in hybrids?
Well, look, that's been a great success for us. You know, it's our customers have choice with us. They can get an ICE engine or internal combustion engine, they can get a hybrid, and they can get a full EV vehicle. We're leading in hybrids. We have great products for our consumers. We're growing considerably, as you said, up 30%, and we're going to continue to lean into that space. We had been out in front of it. We've been a leader in hybrid for years, and we're going to continue to do that and offer our customers the choice they want, you know, to find the best powertrain that meets their needs. And I think that's a competitive advantage for us, and it's proving that in the marketplace with the results we have.
All that other talking about, that was pretty meaningless. I mean, the video's linked below if you really want to watch it. But this hybrid stuff, this is what's got me a little bit of concern. Wasting resources on this dual powertrain that is merely a stepping stone. You're playing on your consumers' ignorance about what is best for them. But I suppose if you're hopping in a Ford vehicle, it's just going to be a lateral move, whether you go from the internal combustion engine to the hybrid to the EV. You will make money from hybrids, but that will be the sugar. It'll only be short term when individuals start realizing that you don't need two powertrains. All of the maintenance involved in both combined into one vehicle, you still have to spend money on gas. This is extremely short term, a stepping stone to the battery electric vehicle. The hybrid model simply isn't sustainable long term.
Average loss per electric vehicle, $38,250, which I realize is an improvement off of what we've seen in recent quarters. But what is it going to take to get to profitability in that unit?
Stop wasting resources on internal combustion engines and hybrids. Use that time and energy to build out a supply chain that benefits you, Ford. No one is simply going to hand you the keys to the vault that gives you access to EV profitability.
Like, the EV market's a really tough market right now. When you step back and look at it, since the first quarter of 2023, volumes are up 34%. Revenue's flat at $14 billion for the industry. So it's a cost game. We're going to take out $1 billion of costs out of our EV business this year, and we're focused on doing that for current models, future models.
How do you plan to do that?
Look, we're designing our future model EV programs to be competitive with the lowest cost players globally, and that's what we're focused on. It's a cost game. There's over 150 vehicles coming to market, EV vehicles coming to market by 2026. So it's going to be a really tough market, and cost is the game that needs to be played.
All of those vehicles that are said to enter the US market by 2026, none of them will be able to hold a candle to what Tesla plans to unveil. But something tells me that's not what's going to make or break Tesla in the long run.
Tesla stock is up more than 23% since the company reported quarterly results last week. I thought it was somewhat disappointing, some of the stuff that we heard from Tesla. Why did the stock perform so well? I guess it's in the eye of the beholder.
There's a couple of things. One, the gross margins on the auto side were better than expected. And it's pretty clear that the company is self-sustaining from a cash flow perspective. And as they continue to grow as an EV maker, and we continue to be very bullish about on their EV technology, it extends the runway on their ability to deliver on the autonomy opportunity. And while we have some caution around that autonomous technology, I think folks started giving them a lot more credit for that runway and their ability to deliver on that promise.
As Elon would say, if you don't believe Tesla will solve for generalized autonomy when it comes to driving these vehicles, probably shouldn't be invested in the stock.
If you're just looking at the prospects for selling Teslas around the world for premium prices, I mean, that part of it is it, would that cause you to buy the stock here? I mean, and even some of the profit being so profitable, but a lot of it had to do with that pure profit the company gets from selling those environmental credits to other automakers.
Selling Teslas for premium, it's so short-sighted. They could push out as many vehicles as they possibly can, sell them to the rich, but that is small potatoes and not aligned with the mission. Transitioning the world to a sustainable energy economy first starts with the automotive pillar. Getting as many Teslas in the hands of consumers is the goal right now, collecting as much data as they possibly can in order to solve this gargantuan problem. Data, compute, all this training is required so that we can make FSD feature complete and give it a huge runway into having a autonomous ride-hail service. It just so happens, once Tesla cracks that nut, they will become the most valuable company on the planet.
When we look at it, it was about a little less than $800 million in credit revenue that they had in the quarter, and so there's a meaningful contribution to their net income from those credits. And that comes from multiple geographies. But at the end of the day, we look at least half, if not more, of the value being ascribed to their AI opportunity, and particularly autonomy as the first application within that AI bucket. And so for us, the EV opportunity is meaningful. They're executing on it well. They continue to drive costs lower and have great products. But the AI, bucket of profit pool that they're trying to dip into here is really what's driving the value in the stock. And we think they're further off from actually being able to deliver on that than what the stock is saying at this point.
If it does go, Colin, to, and I think that, we were a little bit surprised maybe that 30 trillion, that someone would even mention that number for what the company could be worth. And then Andrew said, well, why stop at 30, right? I don't know, you figure that's like Austin Powers.
Like a terminal value? I mean,
why talk about trillions when you can talk about billions?
When you're talking about ride-hail, autonomous, the utilization practically evolving the way our society functions, there will be boatloads of dollars attached to anything associated with that change. A multi-trillion-dollar opportunity at hand. But lest we forget, FSD will be the framework in which Optimus functions, inserting a humanoid robot that can do most, if not all, functions that a human can do, doesn't get tired, doesn't need breaks, can work round the clock doing various tasks. We start thinking about labor in an entirely new light. The opportunity, the financial opportunity for the company that can do that successfully. A general, multi-purpose robot? Yeah. You're talking about $25+ trillion opportunity if that company can execute on what they plan to deliver. And Tesla, they have a history of achieving the impossible.
How much of that will still be electric cars, and how much of it is going to be everything else that gets under the Tesla umbrella?
We're really looking at the potential for them to grow into, $5 to $6 of earnings by 2027, 2028. And so if you put a multiple on that in the high teens, you can get yourself into the $100, maybe $120 range for the stock. We're looking at the energy storage business at worth $20 to $30. And then the balance of the stock price here is really being driven by the AI potential. And they certainly have a very capable engineering team that's working on these opportunities, but it really comes down to when and what the competitive environment looks like. And right now, from a regulatory perspective, they're certainly behind. From a cars on the road perspective, they have more vehicles on the road, but not vehicles that are actually, driving themselves. And so the testing process is going to take a fair amount of time before they can actually start monetizing that in a real way.
Presenting this data to regulators is going to be as easy as, I don't know what the hell is easy nowadays, but it's going to be relatively easy. Numbers don't lie. And Tesla's being super cautious with their technology. They could have easily put this thing on guardrails, made this a level 3, level 4 system, saying it can only operate here and here where it knows it's going to be perfectly fine, but they have grander ambitions. Keeping it a level 2 system where the driver is just supervising, intervening when absolutely necessary, keeps these vehicles on the road collecting data, and just like a kid, using training wheels to ride a bike. One day you're just going to remove the training wheels, like Tesla will just remove the supervisor, and they'll let their child wander down the block, proud of what they've accomplished. Elon and the team reiterated that they plan to start unsupervised rides in Texas and California sometime in 2025. Even if it's 2026, that is much sooner than what many of the analysts on Wall Street anticipate. It'll be this surprise that will send Tesla stock soaring so violently that Tesla shorts will go into epileptic shock when they see their brokerage balances. Me? I'm just gonna continue to load up with every spare cent that I've got in TSLA and get ready for a bumpy ride, folks. In conclusion, some rough times over there in Europe with the VW brand. And I hate to say it, but there might be some mild foreshadowing as we peer into the American legacy auto manufacturers. I hope they can turn it around. I really, really do. But it just doesn't seem like they have the sense of urgency that's necessary to make these radical changes to be around in the next 10 years or so. I hope that they can prove me wrong. Meanwhile, Tesla is making battery electric vehicles for money while everyone else is not, while simultaneously developing an autonomous ride-hail service, developing the most advanced humanoid robot the world has ever seen. It turns out second place needing to see Tesla with a telescope was an understatement. That's all I've got for you today. Be easy. Peace.